Imagine losing all your money in 3 seconds. Man, are you crazy? Seriously, think about it. How would you feel if all your money in your bank account dropped to zero as I teared that paper banknote just now? That was exactly what I experienced when I was 19. You might think, how is that possible? During the summer break after the A-level exam, I worked as a part-time sales in a department store. I was responsible for selling home furniture to customers. When I was working there, I realized earning money is not easy. You know, working is tough. Waking up early every morning, standing there for 8 to 9 hours a day, selling products to the customers, packing goods, doing all the heavy liftings in the warehouse. I still remember how sore my legs were after a whole day of laboring. That was the first time I thought about diversifying my income sources. I did not want to rely on a single paycheck after I graduated. And that was the beginning of everything. Thinking of ways to make money work for me when I was 18. Fast forward to the first year of my university study, things started to get a little bit interesting. At that time, Hong Kong had a bullish stock market and I gained a bit in the stock as well. Wow, I wish I was even older at that point so that I could put more money into the stock market and earn even more. I started to get interested in getting into the financial industry. As a business student, I took part in a financial case competition. I used many hours to prepare for the case, researched about the stock market, analyzed the trends, study about different investment tools, and also prepared a deck to present on my investment strategy. To my surprise, I won the first runner-up and received $5,000 as cash award. Winning the competition allowed me to gain extra confidence and think about where to invest next. Although my university life just started, I was hoping to gain as much working experience as possible before I apply for investment banking internships in year 2. I did a winter internship in an independent financial advisory IFA company. Then I got my second offer from a London gold broker dealer. Well, at that time, they marketed it as a sales and trading summer internship. Sounds prestige, right? Little did I know that was actually a summer job about London gold cold calling. Now, I have to be honest with you. This particular sector has a controversial reputation in Hong Kong. But I was so eager to build up my CV, so I decided to try it anyway. I thought to myself, well, perhaps I could at least learn something about trading commodities. In the end, I only spent 2 weeks working there and I quit afterwards because I simply could not agree with their selling practices. However, I continued trading London gold myself together with a friend that I met when I was doing the internship there. We executed our first trade and we achieved a super high return of 80% in just one night. Can you imagine the excitement we felt as a year 1 student? Even now, when I am in my 30s, I will still be super excited about such a high return. I mean, 80% return from one trade in just one night? How rare could that actually happen? Our first success made us more ambitious, and we continue exploiting the opportunities we found over the next 8 months. I put in all the money I have gained in my previous investments, case competition, and my saving into trading gold, which was about 30,000 Hong Kong dollar. That might not sound a lot to you. That was almost everything that I've got at that time. Obviously, this amount of capital is not sufficient to change my life, so I decided to leverage by 100 times. You did not hear me wrong. Some of my trades were leveraged up to 100 times. Yes, that was super insane, but that was exactly what I did back then when I didn't even know what to fear about. But I managed to grow my capital from just 30,000 Hong Kong dollars to 120,000 Hong Kong dollars in just 9 months. Could you believe that? 300% return in just 9 months? You see, I cannot even make such high return in just 9 months with my stock trading now. I became so proud of myself and I thought I discovered a secret formula to financial freedom. Earning quick money made me wonder, do I even need to find a job if I could achieve consistent profits like this every month? The idea of being my own boss and relying on my trading skills to generate income seems really nice. Well, that did not last long. If it was a happy ending, I would not end up working in the banking sector afterward. In the end, one single trade crashed my whole account. I lose all my $120,000 in just one trade. wiping away all the profits and money I've made in just 3 seconds. I was so shocked and I did not know how to respond at all. It was a super painful experience that finally put an end to my gambling style of investing in the gold market. You see, that was not even the hardest part. The hardest part was having my parents by my side, witnessing this special moment. Originally, they were amazed by my success in the past trades and even considered topping up their money into my account so that I can trade for them. Losing all my money at age of 19 was crazy. It was a challenging experience that shook me to my core. I quit investing and I had a very low time of questioning my financial abilities. Well, since trading could not help me make a living, I refocused my life priorities into studying and started finding internships again. I became scared of investing. What's more, I was worried that my pride could make me fail again. It took me a period of time for me to reflect on myself and calm my emotions down. During my reflection time, I realized my passion for investing was still there. Out of my expectation, like a weak candle flame, weak but still burning deep down in my heart. So I decided to learn from zero again. I began to explore different investing strategies, learn to analyze market trends, and build up a right mindset of risk management. Like many of us, I started learning value investing from Warren Buffett and later explored more about momentum investing led by William O'Neill. Today I focus on momentum investing strategies and I have brushed up my trading skills after so many years. So here are 3 investment mistakes that you must avoid if you do not want to experience my heartbreaking failure, especially if you are just a beginner. First, do not leverage if you are new to investing. If you are leveraging up to 100 times like I did 10 years ago, it is super dangerous. You're basically gambling rather than investing, and you may risk losing everything when the market goes bad. When you leverage your investments, you're basically amplifying your potential gains and losses. If the investment goes well, it can multiply your gains. However, if it ends up poorly, the losses will be magnified as well. The reason why I could earn so much in a short period of time was simply because of the leverage that I applied. I was taking an extremely high risk for a higher return. Now, what you should focus on is to sharpen your knowledge and skills first before diving yourself into the world of leverage trading. Remember, it's not about earning quick money and losing it just as quickly. Consider learning an investment strategy that you can manage the risk and potentially earning a good return like momentum investing instead of taking a super high risk for a high return. Second, avoid emotional trading. Emotions play a big role in our investment decisions. Fear, greed, and overconfidence are common emotional biases that could cloud our judgment. It is easy to be over-optimistic and think that you will keep winning and miss out the warning signs. To manage your emotions, you need to set a clear investment goals and have a well-thought-out plan. You should seek advice from experienced investors for guidance. Simply because there's no boss in the stock market does not mean you're free to do anything. Having no rules in buying and selling is the main cause of emotional investing. Build up a clear mechanical investing process help you stay longer in this investment journey. Third, never neglect risks. Without a proper risk management mindset, is a recipe for disaster. Do not adopt a all-or-nothing approach like what I did 10 years ago. It may seem tempting when you are riding a wave of success, but it leaves you vulnerable to uncertainties down the road. It is very important to set stop-loss orders to limit your potential losses. Always reserve a buffer and maintain an emergency fund so that you could handle unexpected expenses in life. If you are following my Instagram or even my Patreon members, you will understand why I emphasize on risk management all the time. A painful experience of losing all my money for once is enough. I do not want to experience that again, nor any of you to ever experience it. It's not just about chasing high returns, it's also about managing risk, maintaining emotional stability, and staying focused on your long-term goals. So that was a bit about my trading journey. If this video is helpful to you, give me a thumbs up and subscribe to this channel. Check out my other videos to learn more about my career and investment journey. See you next time. Bye.